following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And, this is kind of like, I don't know if you guys remember this. I was kind of glued to this situation back in, 94? Was it 94? 94, 95? Whenever OJ was having those issues, you wake up every morning and you don't know, what's going to happen if you do wake up in the morning. Maybe you stay up all night like me, but you don't know what's going to happen with the Trump, Hillary emails. God, it's crazy, isn't it? Somebody said this. I mean, this is the presidency that it's never happened like this before in the history of the United States, and I think it's like that statement times 10. This is crazy, guys. Ooh. But we're not here to talk about Trump. You get enough of that on every channel, 24 hours a day. I wake up, I wake up in the middle of the night and look at my cell phone and just look up news stories. It's always something new. That being said, let's take a look at the S&Ps. Really, just is this to the tick? 2107.75, 2108 rounded off. This is 21,850. This is the unfair low on the daily profiles here. Yeah, JB, it's kind of like I was thinking, where's this thing headed? It might be headed back in the dark ages, like the 1300s, but not without the plague. I mean, just crazy times. Maybe not diseases flying around, but we may be headed there. I thought that was funny. Here we go. Okay, so this is interesting what's going on right now, and I'm going to tell you why. This is our weekly, and there's that 21.34 rounded off. So we're sitting right now at, going back to the S&Ps, and we're not going to talk about the 1300s and Charlemagne and all that kind of jazz. Was Charlemagne in the 1300s? I can't remember. Right now we're trading about 21.34. That's 21.34 weekly unfair lows. So this is what you've got in front of you. You've had the pullback below these weekly unfair lows. You haven't had a weekly close. You've had a couple of daily closes. You've hit that point, which has been cool. We always try to let the market come to us and pick the battles around these major inflection points, or at least I do. Now we're tracing back up into that 21.34 area. In my opinion, and we pierced it a little bit this morning. We reached out at 21.38. I'm looking at this as, we haven't had the close below on the weekly and go back and retest, but I'm looking at this as a short opportunity. This is the precipice of whether we're going to stay in the balanced area on the weekly for the week, or we're just going to trail off and we're going to have a weekly close, and you're probably going, thanks, Captain Obvious. Tell me what's going to happen. We're looking at this. I'm looking at this as a tracement back up into resistance right now, and I'm actually looking to sell this. I don't like the way the internals are looking on the S&Ps right now. You should be looking, and we're going to try to get Joey on in just a second to talk about China, because some new numbers have come out in China, and we want to kind of focus on that. And let me tell him that we are working on that. But I like the way the internals aren't looking particularly well. I like the idea that the market's going to be volatile. I like the idea that we pierced and hit an inflection point to the tick, and we're going back to another one to the tick. This is a massive wide range since yesterday, and volatility is going to be here to stay. And I think you've got to be looking at. You've also got this here's the 240s. So you got a couple of things in your favor here on the short side. Everything we just stated, and you've got kind of this DMZ of a overhanging supply from 34 to 39. And in a volatile time, you can't be looking at to the tick scenarios. You've got to be looking to kind of leg into, multi-time frame resistance areas. So we're we're going to try to get Joey on at the break. And I'm trying to coordinate this right now. And Al, I don't know if you guys know this, but the guy who makes all this happen at TFNN in the background, Al, I'm going to give out his personal cell phone number in just a bit, does an incredible job. You have no idea what it takes to juggle all these things in the background. So we have guests on, there's commercials happening, there's, quite a few things going on in the background, and Al just makes it happen. So kudos to him. And if you guys ever want to send him a fruit basket at Christmas, I'm sure he'll accept it. Here we go. Let's take a look at gold. Joey was, the long-term trade in his mind yesterday was, we've obviously broken down on the technical side. On the long term, he doesn't think this is over. Crowding this 2052, had a little bit of a trading opportunity here. Remember, these profiles are, right when that yellow bar appears in the scanner, yellow peel back, you get those new inflection points to focus on. And a little bit of a trading opportunity there. Caught a little bounce yesterday, reached a high of 1263.64. Now we're back down. Not what you want to see is a long gold kind of, buy the dip type thing. Weekly close last week below technicals on the 1296. And now you're at the precipice here. Here's the 240s. So I'm not interested in buying that inflection point right now. The trade yesterday we talked about was selling breakdowns below 1252 and selling resistance in a 1278. You might be going, if you just joined this show, you might, what the hell does that mean? What the heck does that mean? Excuse me. Kind of in the middle of these profiles and nothing to really hang on to in the long term. No, we want to try to find an area to play defense in. So when we're in the middle of the profile in the long-term trade, sometimes we have a chance to do these, contra trade bounces, but right now, that's really the trigger points, if you will. So 1278.5 and then below 1252. Those two areas, let the market come to you type scenarios. Those are going to be your high probability situations. And as Joey spoke about also yesterday, which is, again, he and I use this information religiously. A lot of different institutional guys on Bloomberg. I speak, a lot of, different cities with Bloomberg, give kind of, a little bit deeper speeches on this information. But it's, it's a very cool system to use as far as waiting for the market to come to you. Guys, we'll be right back. Hopefully we will have Joey. If not, we'll try to catch him next week, but we're going to try.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I don't know if we have Joey on with us, do we?
Hey John, how you doing?
Great. We got
Hi,
Joseph
everybody.
Jung on. Got Joseph Jung on from Hong Kong right now. Joey, I know you can only probably be with us one segment today, and we thank you for that.
Yep.
Hey, we got some bank numbers coming out today. I want to talk about two things if we can. Just the banks in general, and also, or your feelings on the financial sector, and that mixed in with interest rates, things like that, and also, some more privatization situations going on in China. That kind of moved to that scene over there. So can we talk about banks first?
Yeah, sure. We had a couple of bank earnings today, slightly better than expected. That's why we're having a slight bounce in the S&P, and also just kind of just bounce back from last few days. Down move, but I still think that we're in a downtrend going into a high. Every time we've had an election, the VIX has gone up 30, 40, 50% from the lows, and we've just started the move 3 days ago, and we've got another month to go. So I think definitely over the next couple of weeks, we're going to get some aggressive moves on the VIX, and we're going to see continued downside in the next couple of weeks. Beyond that, after the elections, maybe things will settle down after the Fed hike. So probably for the next 6 weeks, we're gonna see a pretty volatile situation. The banks, what can I say?
Citigroup and J.P. Morgan again stronger.
They came out stronger. But if you look at the overall bank stocks around the world, we're talking about a whole sector that's down 30 to 50%. In each of the stocks over the last 3 years, and versus a market versus the tech giants that are up to all-time highs. So we can clearly see what is leading this market. And I think the big banks are being disrupted by fintech and disrupted by regulations, and those two are the biggest disruptors of that sector. And that sector has been net laying off people for quite a few years now. And this is not a cyclical thing. It's more of a it's more of a disruption
Technical innovation
of
thing.
yeah, technical innovation, exactly.
Well, also, how does it factor in that? I mean, with the possible scenario setting up of Hillary, and then you got the crazy lady from Massachusetts, I believe. Her name escapes me right now. That just wants to put massive regulation on the
Yeah, I
SEC,
think
the banks, the whole 9 yards. I mean, is that
exactly. I
something?
think regulation is only going to increase, not decrease. Plus, if you think about the Senate vote and the House and Senate votes coming up,
Mhm.
along with the presidential vote, we're talking about a lot more Democrats in every part of the government,
Right,
which means
right.
that there's going to be even more bills for further regulation of the banking and the hedge fund industry. So I would I would stay far away from that industry right now, and I would look at, I mean, if you were going to be investing any money into that industry, it would be private equity into startups that are disrupting the big banks.
Yeah, I mean, and just guys out there just looking at the relative strength, relative weakness trade. Wells Fargo gave a little pop this morning, but still staying, even right now, with the news, staying below 45.31. And we talked about this. Joey, JP Morgan and Citigroup, strong of the strong, again, catching a bid and staying above weekly and for highs. But, I was in Wells Fargo. I just kind of go in there. I still got an account there.
Yeah.
But I was in there, like the morale is just unbelievable, and they're trying to be so nice. And then I sat down to try to add, some feature I needed to add
Yeah.
online to my bank account, and I was like, well, why don't I just give it to you? I knew this woman in there, like, because don't you guys get some kind of credit if you sign up somebody for a new service, whatever? And she goes, oh no, all that stuff is over. Like, and nobody has an incentive to even,
No, being a bank employee of whether you're an investment bank or a commercial bank or retail bank, it doesn't matter. If you're a bank employee, you're not having happy days these these days, because there's so much regulation. All the incentives are gone. You're not getting bigger and bigger paychecks like you used to for the last 20 years. That had been happening, and that's all gone. So it's just not a happy environment. It used to be the sexy place to work, and now it's Google, Facebook, Amazon, Microsoft, Apple, right? And those are the sexy places to work now. So and if you ever been on the trading floor of or the programming floor of Google and Amazon and Facebook, man, those look like or they have the feel of the trading floors like JP Morgan, Credit Suisse, Merrill Lynch, those types of trading floors back 20 years ago. That was the real buzz, where it was the cool place to work, and now it's all the other places now. It's all the tech places.
Yeah. Okay, so let's take a look. We got about a minute left here. Let's take a look at Microsoft, one of the names that you just mentioned. Here's one that's kind of hit these 58.50s up top and backed off. Got big support at 54.31. Is this still kind of buy the dip stock in your mind, or in this climate?
Yeah, I mean, I like it's a solid name. They've changed the new management. Has really changed things up.
They've really been innovative too. I mean, for a big
they've been very innovative, and that is not a word that I've used with Microsoft in one sentence for I don't know how many years. So
2 decades.
it's So I think That's actually in my buy box right now.
Okay.
I do like that company and what they've done with their business model and having more subscription-based models rather than, just charging you a heck of a lot for Windows and Office.
Yeah, I mean, it's amazing kind of the way they've morphed lately, which has been all good. Gold we've talked about is breaking down below 2052. Good call on that to kind of stay heavy on that on the short side on the long-term trade there. Joey, thanks for joining us this morning. I know you're busy today. Appreciate the insight.
Yeah. Did you want to talk about China?
Yeah. If you can stay on for another break, that'd be awesome.
I'll stay on for one more.
Let's talk China when you get back. Thanks, guys. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I think we've lost Joey.
Hi.
Okay, hey, you're back. Okay.
Yeah.
Hey, got a couple of numbers out right now before we get into talking about China.
Yeah, retail sales, right?
Yeah, PPI and retail sales. Let me pull up our futures right here, and let's see if we're out. Are they out yet? Guys, the big numbers on the 10-year, 129.22 and 130.14. That's the daily inflection points, just to give you guys a heads up there. Are we out yet? Yep, we're out. It kind of looks like a non-event. And the S&Ps, Joey, just to let you know, I know you're on the road here, have rallied back up into this 2134 area, 38 this morning, and that's that possible kind of rally up into resistance. We hit 2108 last night or yesterday afternoon, which was kind of another big inflection point down there. Those are the big ones we talked about. Okay, guys, so numbers are out. Joey, can we talk about China a little bit?
Yeah.
And gold's coming off below that 1252 area now. So, all right. So
yeah. So 1252 is going to be some support there. It's not going to break right through. It's probably going to try to bounce off of there again. But it was interesting. It never got up to like 1265. 1278 is the ultimate resistance there. It never even got near there, which means that, we are probably going to break through this 1250 level.
Yeah, we're at 1248 right now. We've actually hit 1247 in the last couple of minutes, so we're starting
okay. There you
to kind of go through there.
Yeah.
Dollars rallying. I mean, that's the long and strong to 99 or 100. Just kind of giving some reactions after the PPI and retail sales. Okay, can we hit China really quick? A lot of privatization going on there. Government kind of handing over, I guess, more heavy-handed control over some companies there. What's the general thoughts in China? And I see the Shanghai starting to finally move up here. Finally.
Yeah, I wouldn't. I mean, if you look at the Hang Seng Index and the H-share index, they've actually broken down below the unfair low on the dailies. They're technically probably one of the weakest markets on the daily charts.
I got
on the weekly charts, on the weekly charts, they're just kind of hanging in there still. It's rallied back feebly. Like it really hasn't rallied back that much. So I mean, I think it's really hitting a lot of resistance, and we're now just we've just broken the dailies. We haven't broken the weeklies yet. I think in the next few weeks we should be able to break the weekly as well. I don't see that much upside. There's really not much great news around to make it break out to the upside. I think that the rally back is just really a bounce back from oversold levels and short covering. So I'm not that optimistic on those markets. There's just not that much news. I mean, we've had the Chinese government ratcheting up credit for a long time, and yet these markets haven't been able to really rally. If all that good news and the property market has been very, very buoyant, it's up like anywhere from 50 to 80% this year.
What?
This year.
What?
Year to date, the major cities are up 50 to 80% because the Chinese government has allowed the free credit. Basically, told all the banks to just lend out at will.
My God.
So despite a huge rally in the property market, we're not seeing any participation on the equity side. I just don't see further good news to propel this,
Okay.
And even this bounce back has been on very low volumes.
Okay. That's interesting. I wasn't aware that it had skyrocketed that much over there.
Yeah.
How I'm not going to mention another country over there, and the property situation there. We'll talk about that after the show.
Yeah.
The other island across from you. Sorry about that.
Yeah, that other island.
Yeah. Can we talk a little bit about? I mean, we talked about copper a little bit. This thing is really coming off now. getting below that 214. Considering what you just said about China, that type of, I guess that's not a building boom. That's just
that is a building boom as well, because that has actually fueled a lot of building, and that's why you've seen zinc prices really move up, steel, galvanized steel prices really moving up. But copper hasn't really. Copper's kind of rebounded, but much less so than the others, because the most of the building is kind of in infrastructure, which is steel and zinc related, like subways and stuff like that, rather than pipes and So I think
how's
it's a lot more.
Last time I was in Hong Kong, I was the high-speed train rails, things like that. I mean, how?
The high-speed rails are, in 5 years' time, China has built an entire infrastructure of high-speed railway throughout the whole country.
God.
It is unprecedented. I can go high-speed rail, or I can take the plane from virtually any major city now, and it's just amazing how it's just amazing. You have to be there to experience it. We've been talking about.
Incredible. I mean,
we've been talking about a high-speed rail between Boston and New York, or LA and San Francisco, for how long? And I think it's never going to get done. The only people that are going to do it is Elon Musk and a Hyperloop.
Right.
Forget about waiting for some government to actually approve some project to build high-speed rail. That's just not going to happen. It's going to go straight to the private sector and Elon Musk.
Yeah.
That's who's going to get it done.
That's a very fair statement. Hey man, look, I know we got another break coming up. I appreciate your time this morning. It was good insight. Let's
great
pick it up.
talking to you, John.
Yeah.
You have a great weekend, and hope everybody has a great weekend. And we'll speak next week.
Thanks again, Joey.
Okay, take care.
All right, guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We had Joey Jung on earlier. Always good to hear from him. And I could talk to him for days nonstop on what's going on in China. I mean, if you guys have never been over that way, it's not exactly that expensive to get over there this time of year. Just go to Shanghai, just look around at what is going on there. It's just incredible. It'll scare the heck out of you. But yeah, some of the high-speed rail situations there are incredible to watch just develop. I mean, you look at something one day and you go back in a week and they've done a lot of, incredible work there. And like you said, I think they've been kicking around some high-speed rail idea for 20 years between some of our major cities, and it's just red tapishly not going to happen. Here's silver, which is sad. Here's silver. 1738 unfair lows on the daily here, kind of crowding. Gold busted through a little bit. Not the type of bust through you want to see. You want to see a little bit more momentum here on the golds and the silver if they're going to bust through there. So let's go back to gold really quick. Coming all the way back up into 1252. Again, this is kind of a wait and see. A daily close situation is probably your better bet on gold and silver here. Just kind of let somebody else put the stake in the ground, whether gold needs to be below these fair auctions or not, and silver also. The 10-year. Let's take a look at this one. So just smack, this is a no trade, smack dab in the middle of the fair auction on the daily there. The S&Ps, no scary stuff coming out with the PPI or the retail sales. So S&Ps are kind of hanging in there, but I'm still looking at this, like I said at the beginning of the show, with jaded eyes, and I'm a big fan of selling this retracement up into this DMZ between 34 and 39. And here's your 240s. Again, maximum rally back point on these things. Let's take a look at crude. This has been just amazing. Staying above 49.75 and 50. And now I think the good news is on crude, I like how this thing has come up into this area up top. I like selling 51.22 here. We've reached a high today of 51.14. Started backing off. I don't mind shorting this, even though we're looking like we're could possibly have a weekly close above 50. I'd like to sell this back into 49.75 from that 51.22 on a short kind of contra trade. I don't have a ton of confidence at all it's going to continue to go north, and has really not been attractive to even play around with until we got into the 50 area. So let's see here. Talked about copper. Copper, again, should be going up, and breaking that 214 is demoralizing for me. I was trying to pick some up there, but again, that's what stops are for. Let's take a look at the bean trade, the November bean trade. So 964, still the big number. We reached it this morning, backed off again. Here's the daily. Why is that 964 such a big deal? That's that weekly unfair low just kind of spinning around down below here. And still like that as a sell point. And if that doesn't work out, 983 is a little bit higher for that sell point. So again, you've got 983, 964, and 944. Those are the big numbers on beans, and I'm slanted towards the short side. All right. We're going to take a look at the XLF in general. You guys know we got a lot of bank things going on this morning. The JP Morgans, the Citibanks, the Wells Fargos of the world. We looked at Wells Fargo earlier. This is the eternal sell resistance, sell breakdowns, the relative weakness type trade within the sector. The JP Morgans and the Citigroups have obviously been, we talk about that all the time. Try not to trade the mean reversion trade. These pairs traders a lot of times get taken out in body bags. I mean, it is what it is, and they don't have to go together, especially when you got a disconnect in one of them, like the Wells Fargo situation. 43.74 and lower is the targets on this one. Gave you a little gift, rallying back up into that 45 and some change this morning on the pre-market, 45.50. That unfair high on the dailies, 45.31. And gift horse in the mouth. Amazon, we've talked about this is not the stock to be selling long term. Don't try to be a hero, but there's the weekly, and we've actually got 834 this morning printing. So again, getting back above that support at 831.40. Probably got to look at that as support now. We got shook some people out of that trade for the intermediate. Still not a fan of shorting this. That's your stake in the ground on the support side for Amazon. We looked at Microsoft. I love that stock. I love that company right now. Intel. Another one I've been looking at because I've been trying to, say, okay, well, we got this weekly profile that appeared below price action. That's bullish. Market kind of came to us 36.24 this week, reached a low of 36.46. So I'm still bullish on Intel. They've got some, kind of collaborative news out. Might want to read about that one. Increasing the power of the data centers together with some other companies, which will further the machines taking over. Let's take a look at IBM. I say that in jest, but it's getting scarily true. IBM really didn't trade off this bounce here, 155.97, 156. A little concerned about this one right now. I'm out of this trade on the long side. Dollar long and strong. If you guys didn't catch the first part of the show, don't play around with it on the short side. Let's take a look at Tesla. And Joey was kind of right about that. I mean, the only way this is going to get done on the high-speed rail situation is if an Elon Musk type is going to, we're trading 201 on Tesla this morning, so we're right back into that unfair low on the daily. I'm kind of hoping that the S&P's kind of relax here a little bit. Could, be a little bit of a relative weakness trade on Tesla. But yeah, he's probably the only type of person or mindset that's going to actually get that into gear and actually, not waste 10 times more than it would take to build that infrastructure like our good old U.S. government, which may be completely run by Democrats pretty soon. And that is going to be interesting, to say the least. Let's take a look at Netflix. All right, so I'm not a big fan of being long this stock. Got above the 96.18 and has not retraced back down into it. I'm not a big fan of being long this. I'm just still looking for short opportunities, and we kind of got one if you want to just kind of block out the long side. Netflix 102.59 closed below it 2 days ago, retraced, hit it to the tick, and I still think we can get back down into 96.18 and even lower on Netflix. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pezzavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Back to the show, showing Twitter right now. Any retracements back up to 1890, you got to whack it on the short side. That's all I'm going to say about that one. Let's go to currencies really quick. Well, I thought we were going to currencies. Here we go. British pound, new profile today. Been waiting for this one. Inflection points way away from right now. 120.41 and 124.97 up top. I think it's just going to leak a little bit here, but that's your next chance to really kind of focus on a trade. 120.41 contra trade on the long side there. The yen USD cross here. We talked about this one from the long side. 103.52 support on it, and looks like we're going to have a weekly close finally above profiles on the yen. First time, just to let you guys know. Well, we had that little fake out before, but this is a pretty big situation here on the yen. You could have some more legs in on the upside on this, 106, 107 easily, in my opinion. Aussie dollar catching a little breeze up here finally. Kind of blocked out the short side on this one forever, and I like how it's compressing, and I hope we can ultimately at some point get above 76.89 on a weekly close. The euro, God, I love it. Just getting hammered. Dollar strong as I don't know what, and again, that 109 is my target on this one. Been short this forever with the hedge. That's the way to do the long-term trade sometimes. All right, as we go back into this world of the S&Ps, as Tom would say, a little bit more short-minded on this today. Rally back all the way up into this 21.30, 34, 38, 39. That's your kind of collection area on the short side, in my opinion. Gold, love to see a daily close or a weekly close below that 1252. That's going to really kind of put another stake in the heart for longs on that one. But if we close back above here, 1252, that could be a chance to use it as a little bit of a support. The long-term trade on gold, this is what kind of concerns me. We have had that really strong technical breakdown on gold for the first time in a long time, below 1296. That happened last week. So again, things have changed a little bit there. Silver, we've already talked about. Natural gas, let me see. Where are we at here? Let me get the right month up here. Somebody asked about that in the den. Really quick. Okay. The November contract. So there's, I haven't been watching natural gas. 3.033, the breakout above. I mean, I guess the question is, what do you do with this now? There's nothing on the daily up here. There's no hints of new profiles appearing, but you do have some 240s. I'm a little out of the loop on natural gas right now, but the big inflection points, 3.305 and 3.366. I mean, again, you're supposed to be, in theory, blocking out the short side right now and just looking for support. The good news is for longs too, you've had a profile appear well below price action. That's usually relatively bullish. So again, playing with fire on the short side on natural gas now. Guys, you've been great. Thanks again, Joey, for coming on today. Stay tuned for Larry, and you guys have a good trading day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.
She's real fine, my 409. She's real fine, my 409.